Okay, good evening, everybody. Well, I first want to start off saying I hope everybody had a great weekend. And now it is back to business, back to reality. It is Monday, October 17th, 2022. And it was a pretty big rally day on Wall Street. We'll talk about if that rally will last. Is it a bear market rally that we will make new all-time lows, new 52-week lows, or will this be a sustained rally that will potentially take us into a new bull market? We'll talk about it. The S&P 500 was up about 94 points on the day, or about 2.65%, finishing the day at about 3,677. The Dow Jones Industrial Average rallied about 550 points, or about 1.86% to about 30,100. And the NASDAQ Composite rallied 354 points, the largest percent gainer across the major equity indices, about 3.43% to about 10,675. If we take a quick peek at the bond market, that 10-year U.S. Treasury yield, I think just breached below 4%, trading at 3.999% in after-hours trading. The 2-year Treasury yield is trading at 4.45%. And according to bankrate.com, the average 30-year fixed rate mortgage stands at about 7.04%. So one of the things that we're going to talk about tonight is Bank of America earnings. So obviously we are in the thick of Q3 earnings, and obviously every earnings season is started off by the major banks. So last week we talked about JP Morgan Chase, we talked about Morgan Stanley, Citigroup, as well as, I think I said Morgan Stanley already, Wells Fargo. And to round out the major financial firms on Wall Street, we heard from Bank of America, and it was a very, very solid report. Now, nothing out of the ordinary. If you guys have been tuning into the streams, we knew that investment banking revenue was going to fall off a cliff. We knew that sales and trading revenue was going to come in very good. And that's exactly what happened. Now, we will be talking about some very specific things coming out of the report as it relates to delinquencies in the credit card lending sector of the bank. And I think you guys will enjoy that conversation. Lastly, we will talk about a key piece of economic data that came out today, which is the Empire State Manufacturing Survey. Now, if you remember from last night's Markets a Look Ahead stream, economists on Wall Street were expecting about a negative 2.5 reading, a negative 2.5 reading for the Empire State Manufacturing Survey. Do you guys know what the actual reading came in as? You want to take a guess? Well, I'll spare you, and I'll just tell you. It came in at negative 9.1, absolutely cratering, falling off a cliff. And we're going to talk about that in depth on tonight's stream. Well, that's the intro. Let's see who we have in the chat. Hopefully you guys had a fantastic start to the week. I see my friend Otto is here. Hey, Otto, good to see you. Happy Monday. Trust you're well. Linda Silva is here. Vinny Castellano, Santa Monica Rodriguez. The one and only British Gray is joining us. Daryl. This is good evening, Tom, from Chicago. Good to see you, Daryl. I see By the Book. I see Golden's Dawn. Well, let's get started on the stream. Let me close the window. You know, it's going to be a very rainy stream tonight, everybody, so I will forewarn you. But the good news is I brought the umbrella. I almost left the house without it, but we got it. So let's head downstairs. I see NMB 045. Good to see you. Trust you're well. So we are on the 4th floor tonight. You're going to be heading down. I see Destructionist. Good to see you. I see Barry Bell. Welcome. The one and only Austin City Limits is joining us. Trust you well. I see Paulette. This is happy Monday, Tom. It's going to be raining out. Yeah, I think it's supposed to stop. So hopefully it stops in about maybe 10, 15 minutes. But let's take the elevator down to the lobby here. Horatio Snipes, what's up? Latha, always a pleasure. Good to see you. And Friendship Lights. Buff20 says, hey, Tom's Forbes is predicting Tesla will be the street on Wednesday, or will beat the street. We'll talk about that. Let me see. I want to make sure because sometimes the internet is no good in the elevator. We'll see. All right, so we are now officially on ground floor, my friends. And it appears that it is already raining pretty good. So I guess we'll open up the umbrella. But do I think Tesla is going to beat the street? I think it's possible. I think it's very possible. JPEG, good to see you. Welcome. Let me just open up the umbrella. So we are now on the corner of East 31st Street and Madison Avenue. And I think you guys are right. I think it's going to rain almost all night. Gibson is here, says I love the architecture. Horatio Snipes, Destructionist. Trust everybody as well. So it was a nice rally day on Wall Street. All of the major equity indices were higher for the day. And I guess that begs the question, is this going to be a sustained rally, or is this just another one of those bear market rallies? And I think it's important to talk about some key levels. So I actually wrote down some key levels for everybody to look at. Now, if you look at the S&P 500 on a daily time frame, if you look at the NASDAQ and the Dow Jones Industrial Average, we've been historically extended to the downside below its 50-day moving average. So what do I mean by that? Well, if you go on, let's say like a tradingview.com or something like that, and you pull up the SPX, so ticker symbol SPX, and you overlay a 50-day moving average, price action is trading about 13% below the 50-day, which is historically extended to the downside. We also got some news on Friday that the vast majority of hedge funds are record levels of net short exposure to the broader market. So I think it's very, very realistic that we could have a normal bear market rally back to the 50-day moving average. And then I think we're probably going to make one more low. Now, the reason why I say that, see, on Madison Avenue, we always have these very fancy furniture stores. Like one couch will cost, $10,000. It's ridiculous. But one of the reasons why I say that is if we want to talk about valuation for a minute, the S&P 500 is trading at 15 times 2023 earnings. Okay, so we're talking about a forward PE multiple here. And historically, if you buy the S&P 500 at a 15 times next year's earnings, that's actually, it's not super cheap. It's also not super expensive. If you have a holding time of about maybe 5 to 7 years, you're probably going to end up in the green and you'll probably make some money. Now, the problem with that is the E in PE. So PE stands for price to earnings. The E is subject to change. Now, there's many analysts on Wall Street that have been slowly but surely knocking down their earnings estimates for next year. And I think that as Q3 earnings rolls through, we're going to have a lot of companies that issue profit warnings or guidance warnings. And I think that earnings estimates for 2023 are very, very, let's just say, conservative. I think those estimates could come down quite substantially. So if you were to buy the S&P here, and let's say earnings estimates come down, well, maybe that you're actually buying the S&P at 18 times forward earnings. But I think if you're just dollar cost averaging into a retirement account or something like that, I think that these are okay prices just to be let's say if you're in your 20s or your 30s and you're adding every month to a basic retirement account, I think that these are okay prices to be gaining some exposure. Hey, Dan Zhang, what's up? This is Tom. Bank of America is the hero of the day and pulled the markets up. Yeah, I mean, Bank of America had a pretty good quarter. We're going to talk about that tonight. I was definitely very impressed with their results. I see Brian is here. Good to see you. Hope you're well. Carbon Fiber is here. What's up, UniJ22? I see Paul Greenwell. Yeah, the ABX girl says, Tom, feeling a little bit better. I'm probably about 100%. My voice is still a little bit shaky, but definitely feeling better. But here's what I would say, in my view. Just to give some perspective where we're at, this is Madison Avenue, headed towards Madison Square Park. So we're about 2 blocks away from Madison Square Park. But I think what I would say is, because I wrote down some notes here, and it seems as if in this market, anytime we have any type of rally, it seems like everybody wants to be very quick to jump and chase that specific rally. And what I would say is, you don't have to swing at every pitch the market gives you, right?
Let's go, Eagles!
I would say that, I guess the Eagles are playing tonight. I would say to wait for a follow-through day if you're trying to buy individual stocks or trend to trade in this environment. I don't think it's necessary to swing at every pitch the market gives you, because we've been historically extended from the 50-day on all the major indices to the downside. And we're just starting to go throughout earnings season. Now, granted, the financials looked pretty good. Banks looked good. Now, are you guys noticing a trend here as it relates to these major banks that are reporting earnings? Now, here's the trend that I'm noticing. Oh, I think we got some rain on the lens here. One of the things I'm noticing is that the banks that have a lot of consumer exposure, right? So retail exposure, tend to be faring a little bit better than ones that don't. And here's what I mean by that. So if you look at Morgan Stanley's report, they reported okay. But if you look at JP Morgan Chase and obviously today Bank of America, one of the things you'll notice is that, yes, it's true that investment banking fees and revenues are down substantially. But the good news is that the consumer banking and retail banking actually came in quite strong to overcompensate for the downturn in investment banking. So if you think about a traditional investment bank like a Goldman Sachs, who's going to be reporting earnings tomorrow, by the way, I think that's going to be very, very important to watch. I think that a bank like Goldman Sachs is going to fare less well off than, let's say, a Bank of America or a JP Morgan. Now, I will say this. Market volatility has been pretty unprecedented throughout Q3. So I think that tomorrow Goldman Sachs is going to report record profits on their proprietary trading desk. So that is my prediction for tomorrow. Usually I don't like to give exact predictions, but I think this time last year, Goldman Sachs set a record for trading revenues. I think they're going to break that this quarter again. So the sales and trading at Goldman Sachs tomorrow, I think, is going to come in extremely, extremely high. Sales and trading revenues at Bank of America came in extremely high today. And I think Goldman is going to be no exception. What do you guys think about that? Hey, Mike Skate TV, what's up? Good to see you, Mike Skate TV. Hope you're well. I see Sally is here. Good to see you. Now, if I'm a little bit slow with reading the comments tonight, it's because I don't really have any hands free tonight. I'm holding the umbrella in one hand and the camera in the other. Yeah, Golden's Dawn is like, Tom, your arm must get tired from time to time. Definitely does. Sometimes I don't notice it. Yeah, Mike Skate TV, let me know if you're in New York, my friend. Please, please, please let me know. So we are standing right outside Madison Square Park. Check out this building here. It's one of my favorite condominiums close to Madison Square Park. I think it looks very unique. Got yours says, I think we lost so many traders in last year. I don't know how they will fare. Well, usually, if you think about institutional traders, right, at like banks, specifically investment banks, traders need volatility to make money. So I think Goldman Sachs is going to light it up at tomorrow's earnings report as it relates to their trading, like proprietary trading. Now, we know the investment banking revenues are going to be down 50% because they've been down 50% at every single bank that has reported thus far. Oh, it looks like there's some type of athletics team crossing here. Let's see who it is. You know, it's probably like Baruch, something like that. Maybe they have like a practice or a training. Hey, San Miguel is here. She's very happy to be with you tonight. Good to see you. Thank you for joining. Sonia C says, hey y'all, it's raining in Toronto too. Yeah, I think it's gonna rain all the way to tomorrow. Dan Zhang says, I feel like when it comes to trading, Goldman just doesn't lose money. Yeah, they definitely don't. They definitely don't. So, speaking of Bank of America, Dan, and team, I programmed the Nightbot to drop the Q3 2022 earnings deck for Bank of America. So if you type !BAC in the chat, once again, !BAC in the chat. If you want to follow along on tonight's stream, I would highly encourage you to just read through that investor deck, because it's going to give you a really good glimpse into the health of the U.S. consumer from a retail side. And I think it's going to be very important to follow that. Hey, Russ is here. Good to see you. This is the best YouTube live feeds I watch every night. Hello from North Carolina. Well, good to see you, Russ. Thank you for being here. We appreciate it. Hopefully the weather's a little bit better where you are. It's cold and rainy here in New York. Right on par. All right, we are going to cross 23rd Street here. San Miguel, I see you. Good to see you. Thanks for joining. Now, I guess we'll just dive right into Bank of America's earnings. But first, I want to give you guys a good shot of the Empire State Building. Bank of America did beat on both the top and the bottom line. But obviously, earnings were down about 8%. I would say net profit was down about 8% year over year. But if you really put it into context, based upon the crazy inflationary environment we've been having, economic uncertainty, and a full interest rate hiking cycle, I think Bank of America reported rather well, given the circumstances. David, yeah. So I'm going to give you some updates on that a little later. David's asking about my Adopt a Bench project. It's coming along. It's coming along good. I have some big plans for that. But check this out. The Empire State Building is lit up in the beautiful classic white tonight. But Bank of America reported earnings, or EPS, earnings per share, of about 81 cents. Analysts on Wall Street were expecting 77 cents. Revenue, they also beat on the top line, coming in at about 24.6 billion. Analysts on the street were only expecting 23.57 billion. So if we think about profitability in a dollar amount, not an EPS amount, profit fell about 8% to $7.1 billion, and that was their net income. So obviously all of the revenue minus the COGS, cost of goods sold, all that good stuff. So pretty good quarter, not gonna lie. I was rather impressed. Now, once again, if you type BAC in the chat, if you scroll down to slide 5 on that investor deck, one of the things you'll see is the specific and individual business segments. So let me turn around here and give you guys a better view of the empire. And those specific segments are as follows. I call them the big four. Is the consumer banking segment, the global wealth and investment management segment, the global banking segment, and global markets. So you could think about like global markets as inclusive, sales and trading, which they also produced a fantastic quarter. But we're gonna hit each one of them line by line tonight. I think I may be able to put away my umbrella. Let's see. I think we're gonna be good. I think the rain is actually stopping. Hey, Austin City Limits is joining us. Good to see you. Wayne McKay, always appreciate you. Christian Hansen says, what's up, Tom? I just saw a video that says banks are making more money now. Yeah, profits are remaining intact. And the good news is that we're not really seeing an uptick in delinquencies. Now, I think anytime that Bank of America reports, anytime that JP Morgan reports, I would say the large credit card issuers, a big line item on the earnings ticket. Hold on, let me, this umbrella is so big. One of the big line items on the earnings ticket is, are you seeing an uptick in delinquencies as it relates to credit card payments? Now, you could have short-term delinquencies, which is like a 30 days, probably like if you're 30 days delinquent, which is really not a big deal because some people, miss a payment or two. It's not the end of the world. But where it gets a little bit scary is when you get to late-term delinquencies. I would say probably about 90 days plus. And get this is what really, really surprised me. So the CEO of Bank of America comes on the call and starts to specifically talk about their credit card lending as it relates to delinquencies. And credit card early and late stage delinquencies remains well below pre-pandemic levels. So think about that. Think about 2018 up to 2019 leading up towards the massive COVID scare. Credit card, both early and late stage delinquencies are remaining well below pre-pandemic levels, with late stage, which is 90-day plus delinquencies, near multi-year lows. Now, what does that say about the resiliency of the US consumer? I was pretty impressed when I saw that. Now, granted, they are starting to see a slight uptick in delinquencies, but people are paying their bills on time and people are paying their bills. Now, are you guys surprised by that statistic? Would you think that since interest rates are going up, since we have war raging in Ukraine, it seems like we are so inundated with bad news, you would think that we would just start to be seeing, delinquencies really spike here. We're actually seeing the opposite. So interesting. Got yours says, we are just starting to feel the squeeze. I think the US consumer is just starting to feel the pain. Okay, so you think it may be too early. Maybe we'll start to see the pain in Q1 or Q2. That is definitely very possible. Hey, GX72 is joining us. Says hello, howdy everybody. Good to see you. JR says record credit card use in August. JR, I want to ask your opinion on something. So I wrote another interesting thing down that came out of Bank of America's earnings report. And do you guys want to take a guess at how many credit card accounts Bank of America opened in Q3? Does anybody want to take a guess? I think you guys would be very, very surprised, because I was surprised. Does anybody want to take a guess at the amount of new credit card accounts that were opened in Q3? Hey, the ABX girl says they must keep the payments current. It's their lifeline to pay their other bills and food. That's a good point. That's a good point, ABX girl. Hey, I see Rob from Toronto that joined last night. Good to see you. So Dusty Cole says 3 million, Buff 20 says 1 million, SP says 1.5, Silva says 1.3. Yeah, so you're right. 1.3 million. I mean, think about that for a second. So this comes out of the consumer banking division, right? So here were my big key takeaways from the consumer banking division at Bank of America. So they opened a record 418,000 new checking accounts. That is the 15th consecutive quarter of growth, and the largest quarter growth ever since 2008. And they opened about 1.3 million new credit card accounts, up 20% year over year. So 20% growth in new credit card account openings. Now, what are some of the potential things that we could be taking away from that piece of data? Hey, Skippy's here. What's up? Skippy, good to see you, my friend. This is rainy night in New York. This is a very, very interesting and beautiful wine shop here. But Rob in Toronto, it's good to have you back on the stream. Thank you for joining. So here's, and I sort of like to present both bullish and bearish cases. So here is a potential concern that I see from this data. Okay, Bank of America opened 1.3 million new credit card accounts. That's up 20% year over year. So to me, this could potentially say, well, although it may be good for Bank of America, but what is that saying about consumer sentiment and consumer behavior? Is this saying that consumers are opening record amounts of credit cards because they're potentially cash strapped, and they're like, look, if I can get a $5,000 credit limit, buy food, buy groceries, buy gas, take the kids to school, and just pay the minimum payment, that will provide me a little bit of a lifeline. So maybe the good news is sort of a potential economic forecast for bad news. Now, maybe that's a stretch, but that was one of the things that popped into my head. So what do you guys think about that? Yes, I was going to bring that up next. So Tug Carter, that's a very good point. And he says many of those credit card accounts are prepaid accounts as well. It's a good point. Good to see you, Tug Carter. We are now here at Union Square West, East 17th Street. NYC Dubs are the applicants that fiscally strong? Are the applicants cash strapped, or has Bank of America relaxed some of their underwriting procedures? It's a good question. So I would argue no. And the reason why I would argue that is because I think this is on slide number 6. So once again, for those of you who are just joining the live stream, I programmed the, my umbrella keeps opening. I programmed the Nightbot to give you guys the earnings deck, or the slide deck for the Bank of America earnings report. And it says that account balances are still relatively healthy across the board at Bank of America. So somebody says New York City looks like Chicago. I've never been to Chicago. I would love to go. Mike MTL says, Tom, more credit cards may mean applicants have reached the end of their credit options. Potentially. I think that's a good point. Hey, the one and only Noah Joseph is here. This is what's up, Tom. I think Noah is now a fresh bred New Yorker now, coming from California. How you liking New York so far? Deep Value Alex says, people do rely on credit cards in bad times. Well, the credit card spending was up at Bank of America, and it was up in all the obvious categories. Spending year over year jumped on gas, on food, the most, and probably that's just due to the inflationary pressures. I mean, the price of gas is skyrocketed, so obviously if people have no change in consumption habits and they're buying the same amount of gasoline and the price tripled, well, obviously that spending amount is going to go to the moon. Skippy is like, does New York City ever see sun? We do see the sun, but we're entering into a season where it is, let's just say the sun is very seldom going to be out. Let's just say that. And I'm not looking forward to that. Rachel Abreu says, hey, Tom, hope you're feeling better. I would say I'm about 100%, but my voice is a little bit still taxed. Betsy Gonzalez is here, says, are the bank accounts real this time? By the way, people with money aren't opening new credit card lines left and right. So are you referring to the scandal that happened at Wells Fargo? Because you make a good point. It's kind of a funny comment. I think actually Wells Fargo, does anybody remember this piece of news? That Wells Fargo is actually opening up checking accounts without their customers' consent. Now, how they managed to get away with that? Well, okay, that's a little bit unfair. They didn't get away with it. They had to pay, I think, billions of dollars in fines. But is that sort of what you're referring to? But that did happen at Wells Fargo. I don't think that ever happened at Bank of America. Maybe. Hey, EBITDA is here. It says, hey, Tom, Bank of America earnings turned out pretty great. Yeah, congratulations on a great quarter. We were just reviewing some of the more intricate breakdowns of the quarter, and, as expected, investment banking revenue at Bank of America fell about 46% to about $1.6 billion. But, the sales and trading team at Bank of America cleaned up shop. And I think we're going to see the same thing tomorrow when Goldman Sachs reports earnings. You could see the top of the Empire State Building here, by the way. So real quick, the consumer banking segment at Bank of America, they added about 118,000 new checking accounts. That is the 15th consecutive quarter of growth. They also opened 1.3 million new credit card accounts. That's up 20% year over year. That comes out of the consumer banking segment. If we move on to the global banking segment, that is the investment banking segment of Bank of America, they did manage to come in at number 3 in terms of the investment banking book. I believe JP Morgan Chase still holds that number 1 spot. But investment banking revenue did fall 46% year over year to $1.2 billion. But we already knew that, right? I saw some people on Twitter. Hold on, let me wipe the camera. I saw some people on Twitter posting things about, oh my gosh, it's Armageddon. All these big investment banks are down 50% in investment banking revenue. But I'm like, we already knew that was going to happen. If you've just been paying attention, or if you work in investment banking, or you know anybody who does work in investment banking, or you just follow the markets in general, you would know that 2021 was a record year for deal activity on Wall Street, especially as it relates to initial public offerings. So chances are, if you were an investment banker in 2021, you were very, very busy, let's just say that. But you were probably rewarded very handsomely, to say the least. So that we already knew. But I think, you know, if we want to sort of compare the banks against each other, this is what I would say. I would say that in this environment, when deal flow is down, when interest rates are going up, I think the banks, if you wanted to own any of the specific banks, I'm just saying, you know, if I had to own a specific bank stock here, something like that, I would try to stick to the banks that have a lot of consumer exposure and retail exposure, because that lucrative retail business and lending business, credit cards and the like, is probably going to overcompensate for the lack of deal flow, right? So here's what I think we're going to see tomorrow at Goldman Sachs. Now, obviously, if you walk down the street, it's not like you could walk into a retail branch of Goldman Sachs and have retail banking services. They are an investment bank, although, to be fair, Goldman Sachs has tried to break into the retail banking sector through their new venture called Marcus by Goldman Sachs. Has anybody ever heard of Marcus by Goldman Sachs? Now, if you haven't, I don't really want to say it's a failed project, but from people that I know, it's not going great. Now, Marcus by Goldman Sachs is an online-only bank that is trying to attract retail customers. And I think it's a big money loser for the bank so far. Now, how it's going to fare over the next couple quarters or couple of years, I don't know. I think Goldman Sachs may just, you know, can and close it down altogether. That's very possible. But point is, if it were me in this environment, I think a Bank of America or JP Morgan Chase, I would rather own those than a Morgan Stanley or Goldman Sachs, just because we know investment banking revenue is going to fall off a cliff. Obviously, sales and trading is probably going to be lights out at Goldman Sachs, just like it was lights out at Bank of America today. But if you think about interest rates going up and you think about the amount of deposits Bank of America has at the bank, you know, they're just going to be making more money on the interest because interest rates are going up. So I don't know, that's sort of my thought process. I don't have any individual exposure to these banks, just for the record. Yeah, the LT Prods is Morgan Stanley is trying to get into consumer banking too. But I mean, what are your guys' thoughts? Do you think that they're going to be successful with that? Because I mean, it is a very, very crowded market, you know, especially with the rise of fintech. I don't know. I mean, not to be sort of negative, maybe I can consider myself being a realist. What do you guys think? Andrew H says, did you hear Apple will offer savings accounts through Goldman Sachs? Yeah, I did hear that. So that sort of piques my interest to say, are they just going to close up Marcus and just can the whole thing and maybe just continue this partnership with Apple? What do you think? EBITDA says JP Morgan Chase and Bank of America are also doing extremely well with their wealth management arm as of late. Yeah, you're right. They did crush it on that too. It's a good point, EBITDA. Two Barnacles says they will be successful if they deploy competitive products. Maybe. Fine Life 309 says, Tom, have you been to San Diego, California? I have not, but I would like to visit. Mike says online only retail banks suck. So I actually do a lot of my banking through Charles Schwab. And I have not had an issue with Charles Schwab. Now, speaking of Charles Schwab, they reported earnings today, but I spent so much time focused on Bank of America, I didn't even have enough time to see how they reported. But I actually do a lot of my banking through Charles Schwab as well. Hey, Abby One is here. Good to see you. So speaking about, something that EBITDA put in the chat as it relates to global wealth and investment management, he's right. Bank of America knocked it out of the ballpark again. They added about 18,000 net new relationships and opened a record number of accounts in Q3. Oh, everybody, check this out. This is what I was talking about. This is the Wegmans that's going to come here. Now, granted, it's not going to be right here exactly. We have to walk around the block, but I'm excited for this. This is going to be awesome. I'm not sure if anybody in the chat has ever been to Wegmans, but it's, I would say, one of my favorite grocery stores. All right, since I mentioned it, I gotta take you guys around to the location where it's gonna be. Hey, Noah Joseph says, Tom, New York has only brought me wealth and happiness. Thank you for all your shout outs, Tom. It's who drove me to do it. Hey, well, welcome to New York, my friend. We're happy you're here. Yeah, Thomas's Wegmans blows away Publix. I just moved to Florida, you guys know. I'm renting out my place right now, but I'm not a big fan of Publix. I don't know. Sivas is Wegmans better than Whole Foods? Yeah, so Whole Foods was acquired by Amazon. And in my opinion, I think Wegmans is a little bit better than them. All right, let's talk about sales and trading. Let's just wait for the light to turn. So sales and trading sits under the global markets segment at Bank of America. And sales and trading revenues were up 13% year over year, with its highest Q3 sales and trading revenue since 2010. Now, I don't doubt that. Well, I don't think I should say that. I obviously can't doubt it. It's a financial metric, but I'm not surprised. So sales and trading departments tend to do very, very good when volatility is very high. So if you think about what traders need to make money, traders need volatility. And speaking of volatility, I mean, if you just look at the Cboe Volatility Index, or the VIX, right, ticker symbol VIX, we've been at historically elevated levels, right? So I would say before the pandemic, you would have the VIX sitting, in the teens, maybe in the low 20s, but now we have the VIX consistently sitting in the low 30s to mid 30s, which implies about a greater than 1.5% move across the major indices. And that's exactly what we've been seeing. I mean, this market has been unbelievably volatile. It seems like if the S&P 500 is not down 5%, it's up 3%, it's down 2%, it's up 1%. I mean, these moves have been crazy wild. Now, that's for the equity side of the house. You could also talk about the fixed income side of the house as well. And if you think about the moves in the bond market, that totally trumps the moves in the equity market. I don't think we've ever seen moves like this in the bond market for the last 20 years. So right behind the Starbucks real quick, not to sort of drift off topic, but this is where the Wegmans will be right here. Used to be an old Kmart. So fixed income trading broke records at Bank of America as well. So sales and trading department overall did fantastic. And you want to know a really, really crazy statistic coming out of Bank of America's earnings from the sales and trading department? They didn't have one day of trading losses in the quarter. That's right, not one single day. Think about how crazy that is. So no trading loss days this quarter at all. Yeah, Onyx 9 says there's the Wegmans at the Brooklyn Navy Yard. You are correct. But for me, it's a little bit too far out of the way to go all the way to the Navy Yard, but Wegmans will be right in here. And I think Meta may be above. I think their office may be above, I think. Not sure about that, but... Hey, Dan is here. This is Walks from Wall Street. That's all because of the repo market. Look it up. Yeah, so we could talk about the repo market if you want. And if you think about what happened over there at the Bank of England, did you notice what they're floating out now? So everybody knows what happened with the Bank of England. They had to step in the bond market and start buying gilts. They're called gilts over there in the UK because the pound sterling was crashing, which was really set off by pension funds blowing up because they had high leveraged derivative products on a lot of these bonds. But when rates started to spike, they started to get a plethora of margin calls. So in order to meet those margin requirements, you need to sell assets, right? So it's just a never-ending sort of waterfall spillover contagion event. And the Bank of England had to resort to quantitative easing. Now, they don't want to call it quantitative easing, but what else could you call it? I mean, if the central bank is buying gilts to artificially suppress yields, I mean, what else do you want to call that? I don't know. So now they announced that they're not going to do that anymore. And they say, oh, we're just going to provide market support through the repos. And that's a scam. But I'll digress. Yes, said TV says the yen is also crashing. Yeah, we've been having a very, very strong relative strength of the dollar. But I think the dollar actually came down a bit today. I think the dollar actually eased a little bit. I see lockjaws here. Wow, check this out. Look at how unique this entrance is to this apartment building. That's so cool. Sort of looks like a jungle when you walk in. Yeah, Andre Almar says, U.S. central bankers, let's print money like there's no tomorrow. Yeah, Dusty Cole says, nice looking place. How much do you think those apartments in there go for? I'd say a pretty penny. I'd argue a pretty penny. Let's just say that. Hey, Terrence E is here. Says, hey, Tom. I'm hearing a 9:45 p.m. start for the Yankees playoffs game in the Bronx. Oh, is that true? I didn't know that. So the Yankees are playing tonight? I'm not a big baseball guy, but I'm surprised they're on a rain delay tonight. It's raining, but it's not too bad. Cerny Banders says, why is Netflix going to be bad? So we sort of reviewed this last night. Now, in my opinion, I think Netflix earnings report is going to be bad. And in my view, and again, this is just opinionated, we sort of discussed this last night, but I mean, in my opinion, guys, is streaming not just so crowded? I mean, I think we took a poll in the chat last night. There was about 1,000 people in the chat room last night. And we took a poll because according to the Wall Street Journal, they ran some analysis. They did a study, and it found that the average American household has about 3 to 4 streaming services, like those subscription services. You could think about a Netflix, Peacock, HBO, Showtime, things like that. And I think we've reached the point of total saturation. Now, maybe I'm wrong, but it seems like Netflix is getting a little bit desperate here because they have just released... Hold on, let me clean the camera lens. I think it's starting to rain. I'm gonna have to put back up the umbrella. Hold on. So Netflix, if I'm not mistaken, they just released a new tier of subscription service. I think it's like $7, and you pay $7 as opposed to the original 12, and you could watch all the shows you want with advertisements. And it just seems like they've reached total saturation growth here in the United States. I mean, I think another thing that's not really going too well for Netflix, even, I wouldn't say just exclusive to Netflix, but you know, we're at a very interesting point in the cycle where a lot of the new shows that should have been coming out, they just physically cannot come out because, well, what did we just emerge from? We emerged from COVID, and very few new shows and sets were working, shooting new content. So I think there's just an overall lack of new content. Hey, Juan says, greetings, Tom and fellas from Buenos Aires, Argentina. Netflix is a theme in my country. A lot of people share their accounts. So, Juan, thank you for joining, by the way. I trust you're well over there in Argentina. And that's another big problem, too. I mean, Netflix supposedly, allegedly, they're going to go on a purge of people who are sharing accounts. Now, I don't know how they're going to do that. But I mean, you know, not to incriminate myself, I'm not a big TV watcher, but I've shared my fair share of Netflix passwords in my day, and I think everybody on the stream has. I mean, is that fair to say? I think if we're honest, come on, I think everybody has, you know, shared Netflix passwords. But I don't really watch TV, so. God says Netflix is good for one thing, short it. Yeah, well, I mean, look, Bill Ackman, which is the hedge fund manager of Pershing Square, he initiated a very large position in Netflix. He held through one earnings cycle, and the earnings report was so egregious that he blew out the entire position. Now, many people wanted to point fingers at Bill Ackman and say, oh, what an idiot. But no, I actually think he did the right thing. That's good money management. You never hold on to a loser. I mean, in the investment business, you make bad decisions, you make poor calculations, you take your loss and you move on. I don't think he did anything bad at all. All right, everybody, we are on Bond Street on the corner of Lafayette. Excuse me. This is one of my favorite apartment buildings here, very unique. Hey, Vonda Howard and Billy is here. What's up? Now, one of the things I like about Bond Street is the original sort of cobblestone streets here. I think it looks very unique. And also all the old buildings with the fire escapes. Dan Zhang says, Tom, have you watched the Jeffrey Dahmer show on Netflix? I have not. Very, very seldom do I watch Netflix. Very, very seldom. NYC Dub says, as respects new generations of users and online streaming channels, when do you think the big cable companies will become obsolete? Quicker than we think. Quicker than we think. Now, we talked about this last night, and I think it's a good conversation to have because one of the best ways to make money in the investment business is to anticipate trends and try to catch those trends very early. Now, anybody who is Gen Z, and I would even argue millennials, do you think that there's any Generation Z people out there? Now, many people would consider me Gen Z, and many people wouldn't. I'm sort of like that lost in between. But how many people within Gen Z do you think consume their news by sitting in front of their TV and watching CNN or Fox News? Do you think you see any 25 to 27-year-old or 20 to 27-year-old sitting like, yeah, I'm just coming home from work, just coming home from school. Let me pop on the old Fox News and CNN. It's not going to happen. I know I don't do that. So I think traditional cable television, with respects to traditional cable news, I think is going to die. I mean, I get the vast majority of my news just through applications or YouTube or even Twitter. Right here. One of the best coffee shops in New York City. Gasoline Alley Coffee. Fantastic place. Jacob O'Brien says those people may only watch to keep up with their BS. I'm seeing a lot of people says they watch YouTube replays. Yeah, that's what I watch. Steven says I love CNN and the fake news. Rob says I watch YouTube, more interesting live feeds. Yeah, I think so too. And, you know, not to get political here, I'm just trying to simply make a point as it relates to how younger people consume media. So again, when I say this, I always like to preface the crowd here, because sometimes people flip out about the politics. I couldn't care less if you guys like Biden or Trump. I'm desensitized. The point I'm trying to make is that no young people are watching Fox News. No young people are watching CNN, regardless of the politics. They are probably getting their news from online, I would say, grassroots media companies. Like, you know, to name a conservative one, you could name like a Louder with Crowder. Okay, to name a more liberal one, I would name like a Young Turks or something like that, right? Now, you may not, again, not to be political, I'm just giving you the mediums that people are watching. You know, for me, if I see, you know, a Louder with Crowder clip, I'll watch that. If I see a Young Turks clip about something, about Nancy Pelosi or about, you know, one of the Republicans, I'll watch that. And that's how I get my news. I don't watch I couldn't even tell you who's like the main news anchor on CNN. Now, speaking of that, I tweeted out something. If you want to follow me on Twitter, if you want to watch it, at Walks Wall Street. Now, the Young Turks did sort of a pretty good analysis about insider trading in the United States government as it relates to both people on the right and the left. And it's so interesting that they did a whole analysis on that when we've been talking about that for the past 6 months on the stream. I actually think they did a good job. Now, here's what I think. And I think everybody on this stream, now I would say the Americans on the stream, I know we have an international audience, I think we would all be in favor of banning the individual stock trading among members of Congress. Right? I think that's a bipartisan issue. Now, I can tell you that'll never happen because it is way too lucrative. It is way, way too lucrative. And some politicians on the left and the right, just the profiteering off of that is so big that it'll never happen. Now, I know that they proposed some sort of bill to ban it, but in my view, it's never going to materialize. But let's just leave it at that. Yeah, Abby says, yes, I totally agree. Dr. Longus says, politics is toxic. Yeah, but I think that's like all of my liberal friends and all of my conservative friends, like it's unanimous. I think everybody in the United States agrees. You know, if you sign up for civil service, I mean, at the end of the day, everybody, you know, this is civil service. You know, you should want to be an elected official to serve the community, not so you could be on all these congressional hearings about, hey, we're going to increase cybersecurity spending, so let me go buy, you know, a basket of call options on Palo Alto networks before we announce the bill of increasing cybersecurity spend, right? That's not the reason why you should be going into public service, is to enrich yourself. You're supposed to be doing it because you're a good person, allegedly. Anyway, we will digress on that. Two Barnacles says, I want freedom. I think we all do, Two Barnacles. All right, team, back on track now. We are on Prince Street in Lafayette. You know, even though it's raining, it's a pretty beautiful night out in New York. Here, I'll take you guys, I'm gonna take you guys into the heart of Soho, because I think Soho is gonna look really, really beautiful in the rain here. James V says, Tom, what's your go-to soccer team? Internationally, I'd probably say Arsenal. I know that's gonna upset a lot of people, but definitely Arsenal. LE, good to see you. Patrick, New York is here. Ryan Beck says, how long before you guys get consistent snow? That's a good question. So I'll tell you a story. And I think we've discussed this before on the stream, but about 2 or 3 years ago, no, excuse me, actually longer than that. About 3 years ago, this guy doesn't have his blinker on. Oh, he's from Boston, that's why. About 2 or 3 years ago, I remember Christmas Eve, it was 70 degrees. Now, again, those are big, big anomalies, right? But I think, in my personal opinion, I think that the seasons are shifting. Now, hear me out on this. It seems to be that it's getting warmer later into the year, and it's getting colder earlier into the spring and in the summer. And here's what I mean by that. So my birthday is in May. And I remember growing up as a kid in New York, right, New York State. I remember it always being so hot on my birthday, like in the 80s, 85, all the time. I mean, over the past 10 years, it could be like a nasty sort of rain like we have right now on my birthday on May 25th. But the good news is, we could have 55 to 60 degree days here in New York all the way into November and December. Has anybody else noticed that? I think I brought that up before, but I mean, maybe it's just me, maybe it's in my head, but I really think that we're just shifting things maybe over 2 months, because the past couple of years on my birthday it's been terrible weather in May, like really bad. Ah, Rich, your birthday's May 18th. Love that. Yeah, Aunt Danielle says yes, same thing. The ABX girl says December 2001 New Year's Eve was 62 degrees. Rob from Toronto says I agree. Yeah, I mean, so we do get snow in New York, but nothing like, you know, a Toronto, Canada or something like that. All right, so this is Spring Street. Betsy Gonzalez is here, good to see you. I'll sort of point the camera up to the street light so you could see how hard the rain is coming down. Now it's sort of like a misty rain, so it's not like I'm getting soaked. It's almost like you're walking through a cloud. But we're about to hit into Little Italy. So for the people who are just joining, the main topic for tonight's live stream was Bank of America earnings. Okay, so Bank of America beat on both the top and the bottom line, coming in at about 81 cents EPS or earnings per share versus about 77 cents as expected. They also beat on the top line revenue growth, coming in at 24.6 billion versus the 23.57 billion as expected by analysts. But profitability or profits did fall about 8% year over year to about 7.1 billion. That is the net income. So net income, for all of those accountants out there, is all the revenue minus the COGS, or the cost of goods sold, interest, all that stuff. So pretty decent quarter. I mean, think about, and I think I said this at the beginning of the stream. Oh, I got to put that on hold. I would recommend this place. Bondi Sushi Bar. This place is very good. A little bit pricey, but if you're just coming to New York for the first time and you're looking for something maybe a little bit unique to do, I recommend that place. It's right on the corner here on Kenmare Street. And it is a good time, very good time right here, Bondi Sushi. So think about all of the economic uncertainty. Think about the inflation, ravaging inflation we've been having here in the United States. 8.5% CPI we just got. We got a hotter than expected PPI, and we have a war raging in Ukraine. And despite all of that, year-over-year profits at Bank of America only fell about 8%. And that is in an environment where we had about 100% move in rates as it relates to, excuse me, my voice may blow out here, as it relates to that 10-year US Treasury yield. So deal flow or IPO activity on Wall Street collapsed. So even with investment banking revenue down 50%, I'd say it's a good quarter. I'd say it's a very good quarter. Now, obviously, net interest income was a big help this quarter at Bank of America as interest rates are going up. Oh, the Little Italy sign is not lit up tonight. It's a bummer. I wanted to show you guys that all lit up. Anyway. Hey, Teresa Diaz, thank you so much for the $2 donation. You're very kind. This is 22,500 subs. Oh my gosh, that's insane. Well, I appreciate everybody. If you guys are enjoying the live stream tonight, feel free to leave a like on the video and hit the subscribe button if you are new. We tend to do these live streams about 5 days a week between New York City and Miami, Florida. Anchovy is here, so that sushi bar is named after Bondi Beach in Sydney, Australia. That's where I am. No way, dude, that's awesome. I didn't know that, man. Well, if you ever, let me tell you this. If you ever come to New York, I'll take you there. Well, let's just say that. Hey, Dan is here. This is Walks on Wall Street. I found you yesterday and I love it. Well, thank you, Dan, for being here. So this is in the heart of Little Italy, Manhattan. Now, one of my favorite things about Little Italy is just the originality of the buildings. I guess you can consider these railroad buildings with the original fire escapes. A lot of original Italian culture down here. But what a lot of people don't know about Little Italy is that unfortunately over the past 25 years, Little Italy has actually been shrinking. Now, a lot of the Italian immigrants has been moving to places like Long Island, New York, where I am from. You could think about Nassau County, Suffolk County, New York, and many of the Italians have moved out to the suburbs for cheaper prices, right? For lower prices. So unfortunately, a lot of Little Italy, a lot of the great spots that we used to have has been declining year over year. And that's why anytime we have the San Gennaro's feast here, I always make a point to go. I always like to, spend a weekend, walk around, because you never know how much smaller this place is going to get. It's definitely sort of a sad scene. But this is one of the best bakeries here in Little Italy. It's called Ferrara Bakery. It's one of the original bakeries here. I would say one of my favorites in Little Italy. There's also another one down here called Cannoli King that's fantastic, that I would highly recommend going to. Hey, John is here. Good to see you. Time lapse. Says Little Italy had been shrinking yearly over the past 50 years. Yeah, it's definitely a bummer. Now, I will say there is another Little Italy in the Bronx, which I think it's debatable. I think it's maybe the same size, maybe a little bit bigger, but... So I do have a controversial thing I want to say. For all of those non-New Yorkers I think if you ever visit New York, you gotta at least carve out, 1 or 2 days to visit Long Island, to go to some of the pizza shops out on Long Island, because Long Island pizza is a little bit better than Manhattan, in my view. But maybe that's a little bit, I think I gotta wipe the camera, but check out the Empire State Building all the way in the back. So standing right outside the Canola King, you could actually see the Empire State Building all the way in the back. And it seems to be very, very busy tonight in here. You have all your Italian gelatos. Yeah, Dan saying it's like if you're eating for the first time, just don't come to Times Square. Agreed. It looks really good. This is the Canola King. For a Monday night, I'll say, it's pretty busy. It's pretty late too, so. Yeah, Barry Bell's is terrible weather on Long Island. Well, it's really nice during the summer. Long Island, Jones Beach, Robert Moses, Tobay Beach. Volta Santos, no, it's a very nice area in New York. So now that we sort of covered Bank of America earnings, I do want to say one thing that we should be looking out for tomorrow is when Goldman Sachs reports their quarterly earnings report. Now, I think before the opening bell, the CEO of Goldman Sachs will be doing an exclusive interview on CNBC. So if you guys want to wake up early to watch that, I would highly encourage that. Now, again, the data that we're going to get from Goldman Sachs earnings report isn't really going to be consumer-facing data, right? Like Bank of America, we were talking about the credit card data with their delinquencies. And the good news at Bank of America is that credit card 30-day and 90-day delinquencies remain at multi-year lows or pre-pandemic lows, which is good. Goldman Sachs is really going to be focused in on investment banking activity, advisory services, and sales and trading. So a lot of the proprietary trading at Goldman Sachs, I think, is going to come in much better than analysts expect. And I want to call it right here on the stream live. I think we're going to break a record. I think sales trading at Goldman Sachs is going to break a record, but investment banking revenue is going to get cut in half. Now, let's talk about some technical levels. I think I'm going to cross the street here. I wrote down some technical levels across the major indices as it relates to the S&P 500, the NASDAQ, and the Dow Jones Industrial Average, because we did have a pretty nice rip-roaring rally on Wall Street with all the major equity indices closing up over 1%. I think with the NASDAQ closed up about 3.5% on the day. So the question is this a bear market rally, or is this the start of something more sustained or a more durable uptrend? We'll talk about it, and we'll talk about some of the more key levels that I think we should be watching. Okay, so now we are coming up on Canal Street. So we are officially leaving Little Italy. And if you notice by the Chinese wording across the street, we are entering into Chinatown, which is one of my favorite places in the city. Dr. Longus's bear market rally for sure. I think I agree with you. So here's some key levels that I wrote down. And here's the reason sort of why I think this is going to be a simple bear market rally. But bear market rallies could be very, very vicious. Okay. So I wrote down some key levels. So the S&P 500, if you look at a 50-day moving average, okay, and usually during bear markets, whenever the price action of a major equity indice gets extended to the downside, about 10 to 13% extended to the downside from the 50, you can usually expect a very ferocious rally back to the moving averages. So the 50-day on the S&P 500 stands at about 3,900. So 3,900 on the S&P, which are just some general targets of where the market might be attracted to. If you look at the 50-day on the Dow Jones Industrial Average, it's right at 31,300. And on the NASDAQ Composite, it's sitting at about 11,600, that 50-day moving average. Now, we did get another piece of data as it relates to positioning for major hedge funds. But before we disclose that, I want to show you guys all the way uptown. You can see the very famous One Vanderbilt building. It's one of my favorite buildings in the city. MZ really says, is Chinatown growing if Little Italy is shrinking? So I've noticed, in my opinion, I've noticed more Chinese restaurants opening than Italian restaurants. But I think that's just because a lot of the Italian community has migrated to the island, right? So for example, in Massapequa, where I spend a lot of time, tends to be a lot of Italians. So I think it's just you want to open businesses where you live, right? So where a lot of the community lives. Now, I'm not saying there's no Italians that live in Little Italy. That's not what I'm saying. I'm just saying that it's unfortunately been shrinking in size over the years. Dan Zhang says, Tom, have you ever seen the documentary about the Vanderbilt family? No, I haven't. Is that on YouTube? Netflix? I would like to see it. All right, I'll give you guys a little tip. Every time we're in Chinatown, I have to tell you guys, if you ever come to Chinatown in New York, this is by far the best restaurant. It's at 69 Mott Street, 456. I come here probably, I don't know, maybe twice a month. Very good. And you have all these paper lanterns here in Chinatown. Beautiful. Hey, Laura M says Raleigh/Durham is okay. It's getting too crowded and is kind of boring, to be honest. So I've never been there, but I would like to visit for sure. Hey, I see sunshine after rain here. Good to see you. Welcome. But once again, for those of you guys who are just joining the live stream, if you type !BAC in the chat, which is the ticker symbol for Bank of America, I programmed the Nightbot to drop the link to the investor deck or the slide deck for the Q3 earnings. And I think if you guys have some time, maybe later tonight or tomorrow, I think it's really advantageous to look through that. So we did have some data coming out of the positioning as it relates to the positioning of a lot of these larger hedge funds on Wall Street. And we have a record amount of hedge funds and speculators having short positions or opening short positions and record levels of put buying. So in the options market, you have call contracts, and one call contract will give you the right, but not the obligation to purchase 100 shares of an underlying security or stock. Now, a put contract is the exact opposite. It gives you the right, but not the obligation to sell 100 shares of that underlying security or underlying stock. So just think about if you are buying or going long, the put side of the market, you're betting that the market will go down. And if you're going long, the call side of the market, you are betting the market will go up. And we've seen a huge uptick in put buying, just as the S&P 500, the NASDAQ, and the Dow are extended about 13% below its 50-day. So I think this rally may have legs, we'll see. And I think it's gonna be a bear market rally, but that is just my personal opinion. Wow, check this out. These paper lanterns are so beautiful here in Chinatown. It almost looks like you're not even in New York City. It's fantastic. Hey, Ken Glass, what's up? It says, hey, Tom, remember streams 100 people? Now it's 1,000 people. Yeah, I mean, it's insane. Yeah, for the original people who used to watch Walks on Wall Street, we used to do these live. I remember when it was like 7 people. I remember when it was 7 of us talking about the markets. Good times. Well, I appreciate everybody being here. Thank you. So this is Doyer Street and Pell Street. Krog Dogs is exactly right about put to calls, not obligated. If only that kid on Robinhood knew before he killed him. Yeah, it's horrible, man. And I've sort of been outspoken about that as well. I think what happened during the pandemic was absolutely egregious. I think it was disgusting. I think companies like Robinhood, I don't want to go off on a big tangent, but I think it's gross. I think it's disgusting. I think they've made investing out to be like gambling. And I get it, when everybody was, locked away with the pandemic, it may have been funny to, treat it that way, I guess, in a sense. But at the end of the day, it's definitely not the appropriate way, I would say, to look at it at all. And I think it's going to hurt a lot more people in the long run than a lot of these meme stock traders and the dogs coins, whatever they are. Yeah, stay away from all that stuff. And that's another thing. It's like, I'm not sure if anybody, most of you here either work in the industry or are old enough to, have opened a brokerage account. Now, when you open a brokerage account, you are not automatically, well, let me show you this mural. This thing is absolutely gorgeous here. You are not automatically permitted to trade options, right? You're not allowed to trade derivatives unless you have experience. So you have to apply to your broker dealer, and your broker dealer will send you a series of questions asking you your experience trading options or derivatives. And it'll usually be level 1 or level 2 options trading. And level 1 options trading is you have the ability to go to your broker and purchase options. Now, level 2 derivative or options trading, your broker dealer will also give you the ability to sell options, right? So you could put on spreads, condors, things like that. And they ask you your age and your experience. Now, what has happened a lot on these crazy platforms like Robinhood and Webull is these 16-year-old kids were just lying on these applications and getting approved to trade options or derivatives, high leverage products. And many people would say, well, that's the responsibility of the 16-year-old kid or the 15-year-old that lied on the application. I would disagree. I think that's the responsibility of the company, right? You should have systems and procedures in place to say that, okay, this person is obviously lying on their account. If they're 18 years old and they say that they have 5 years experience trading options, well, how is that possible when you can only open a brokerage account on your own if you're 18, right? So I give a little bit of pushback there. I think the company should be held liable. You can't just blame it on a 15-year-old kid. Everybody's an idiot at 15 years old. I think the company should be liable for that. Just frame it this way. Think about yourself at 15. I mean, myself at 15, I would have totally lied on that application, right? But it's the company's responsibility to put preventative measures in place to prevent that, because you're dealing with kids, right? Now, once you're 18, game is over. Everything changes, and you are fully responsibility to own your losses. You're an adult. But until that time, that's the liability of the company, in my view. Hey, Sabrina Fair is here. What's up? Says, hey, at 15, I was a legend in my own mind. Me too. Hey, we have the one and only Brad's Brain in the chat. Says, I had to go through procedures to get approval. My dad told me in the 80s he had to go to a brokerage and take an actual test. Yeah, that's true. I mean, in the 80s, there was no really online, there was no internet, right? So obviously you had to go in person. But I think with the rise of online trading, it's just gotten way out of hand. And it's tough, man. Yeah, Daniel's like, at 15, investing was not in my vocabulary. It probably wasn't even in mine either, but, during the pandemic, with these platforms, like the social media platforms like TikTok and all that, these kids were so bored, and they were watching, people, I won't name them by name, but, make out like investing to be a big joke. But at the end of the day, I mean, it may be funny when you're 25 years old, but when you're facing retirement and you look back and you're like, wow, I wish I really didn't, just speculate in options. I wish I had just invested my money appropriately so I could retire with dignity. It's not so funny anymore. So I don't know. I'll digress on that. But team, we do have to head uptown. I'll take you guys back with me. We are going to walk all the way back to 34th Street, the Moynihan train station. Not to be confused with the CEO of Bank of America, Brian Moynihan. Hey, Western Mass Dave. Good to see you, Dave. Thank you for joining. But if you guys have enjoyed the live stream so far tonight, feel free to hit the like button and click the subscribe button if you are new. If you like the type of topics we talk about on the stream, if you scan the QR code on your screen, punch in your email, you will be signed up to receive my free investing newsletter. I try to get it out every other Tuesday after the market closes, where I write about not only the US equity market, but emerging markets, fixed income, all that good stuff. So if you want to join, it's a good way to stay in touch with the viewers in the chat, as well as myself, as we share our ideas in the investment business and in the investment world. This is a really good bakery too, right here. Man, those look really good. You have the vanilla rolls, the chocolate rolls. Man, these look really good. Hey, the Dark Horse, good to see you. All right, now this is Canal Street. We're gonna make a left. And we're gonna walk down until Broadway, and then we'll head all the way up Broadway so you guys can see Soho. Yeah, JR, I saw that. So I think that was 430 Park Avenue, right? I think there was a big robbery up there. Now it's crazy because 430 Park is the building I work out of a lot. And we've actually started many live streams out of that building. And there was a big robbery, I guess a big smash and grab. I saw that, crazy. Yeah, Rob says that's crazy. I think they got off with a $500,000 worth of jewelry, I believe. And the crazy thing is 430 Park Avenue is adjacent from the 432 Park Avenue building, which is one of the most expensive luxury apartment buildings in the entire world. 432, if you guys maybe want to pull up another internet browser or something like that and watch the videos on 432 Park Avenue. I mean, some of the units in there can go for $80 million. Joseph says, what days does the newsletter send out? So I'm gonna get back on a normal schedule, but you could expect it every other Tuesday. I haven't typed one up in a while just because it's been very busy at work, but we will be getting on a more regular schedule. Okay, now we are gonna make a right. One more, we're gonna make a right. You know, I think this is one of those old school desks. Does anybody remember that as a kid? You would have the desk that kind of goes like that. I know, Rob is like, could you imagine having that much money to drop 80 million on an apartment? I cannot imagine that. But I'll do you one better than that, Rob. So in Central Park Tower, which is one of the newly constructed buildings on Billionaires Row, which is on 57th Street. The top triplex, so it's 3 floors. The top 3 floors of that unit is selling for $250 million. And I think once we make a left, we're actually going to pass the office of Sirhant, where they're actually tasked with selling the building. Yeah, Ryan Beck says Ryan Sirhant did a YouTube video of the actual cost to buy that. I know, it's insane. So Sirhant, they actually opened up a new office, and we're gonna be able to see it once we make a right. But $250 million, insane. Yeah, Ryan Beck says the taxes alone on that is probably incredible. Well, I think somebody, maybe it was Latha or Dan Zhang, said it was $70,000 a month for the taxes. Everclear 1102 says, what do you get to eat at 456? I'll tell you what I get. I usually just point to the picture, but this is what I get. I get the chicken and spicy green pepper with the pork and crab meat soup dumplings. You're never gonna go wrong with that. That is the Walks on Wall Street special. All right, so now we are walking up through the heart of Soho. So let's just quickly revert back to overall valuations of the market, okay? Because this bear market, and it's been a very, very brutal bear market, let's not be mistaken. And the bear market officially started, or the top, I would say, the S&P put in a top on January 4th, 2022. And we have since been in this bear market decline. Now, if we think about a forward PE multiple, so as of right now, the S&P 500 trades at a price to 2023 earnings multiple of 15 times. That is down from 20 times in January. So valuations have come down. And I know we've talked about this before, but I think it's absolutely critical to talk about it again, being that we are going through Q3 earnings. Now, forward PE is exactly as it sounds. It is a forward estimate of earnings. So here's the potential issue. It seems as if a lot of analysts on Wall Street are being, let's just say, a little bit too conservative. Well, maybe conservative is not the right word. I think they're being a little bit too optimistic, let's say that, with their earnings estimates for 2023. So let's say if this Q3 earnings season rolls through and we have a lot of companies that report earnings that are pretty good, but they give forward guidance that is being cut. So a lot of the times when companies will report earnings, they'll say, you know what, with economic uncertainty, with the inflationary environment, with the Federal Reserve raising interest rates and the war raging in Ukraine, we are going to cut our forward guidance for revenue, expectations, and profitability for the fiscal year. And that may lead a lot of analysts to then cut their earnings estimates for the next fiscal year. And if that happens, well, that 15 times forward multiple may actually be an 18 to 20 multiple. So historically, if you were to buy the S&P 500 at a 15 times forward PE, it's not a super cheap price, but it's also not very expensive either. It's like okay. And if you were to buy the S&P at 15 times 2023 earnings, and judging by the data, if you hold on to it for about 5 to 7 years, you're probably going to make money, right? You're probably going to make money. But I think the interesting scenario we have here is that I believe the vast majority of the stock market decline so far was a repricing to adjust for higher interest rates, not to adjust for lower corporate earnings. So just keep that as a sort of frame of reference there, and pay very close attention to not only how these companies report, but their guidance. I think that's going to be absolutely critical. So I don't know, I would say, look, if you are in your 20s or in your 30s, and again, this is just speaking generally amongst, friends here in the chat, and you're, dollar cost averaging into the S&P 500 at a 15 times multiple with a 5 to 7 year time horizon, you're probably going to come out ahead. It's a fair price. But just know that I think we are in an environment where earnings expectations are very optimistic, and I think they may need to come down. Now, last week on the live stream, it looks like this guy's getting towed. That sucks. That sucks. Now, I got towed one time, and where they take your car, is to the west side of Manhattan. And I think it's $250 to get it out. So it's not a fun time. And I think it's not only $250 to get it out, I think you actually have to pay the ticket as well, which is like 85 bucks. So not a fun time. Not a fun time. But yeah, just be cognizant of that. Those are my thoughts. So I want to turn it over to the chat. What do you guys think? Do you think that earnings estimates are going to come down? Do you think that this is a fair price in the S&P? Now, I think the PE ratio, standard PE ratio on the S&P right now is about 19.5. But forward PE is 15. So valuations have come down. Definitely a lot more attractive than they were in January, that's for sure. Ooh, another, man, they're out in force tonight. Man, the NYPD is playing no games tonight. This is Prince Street. You can take the R and W trains. Cindy Foley says, yikes, yeah, not fun. That's another reason why I don't drive in New York. Great says earnings estimates will come down for sure. Yeah, Gregory's like, it's earnings season for the NYPD. Oh man, that's too funny. Everclear 1112 says we could see pre-pandemic levels. I have a comment on that. I think that's a good comment. Bob P says you are absolutely nailing it. First comes the event in all bear markets, that being interest rate hikes this time. Second comes the average drop in earnings of 25%. That's a killer. Well, that's exactly what Jamie Dimon has been saying. And Jamie Dimon is the CEO of JP Morgan Chase. Now, did anybody listen to that earnings report last week? We covered it here on the stream. And Jamie Dimon is forecasting an economic hurricane, to use his words, not mine. And in an economic hurricane, I would assume that earnings would be lower. So, hey, Iron Chain 123 says, hey, I'm gonna head out, have a good night. Well, thank you for joining, I appreciate it. We'll see you tomorrow and have a fantastic Tuesday. We are now here on East Houston Street. And if you keep walking up this way, you'll hit into the Williamsburg Bridge. Maybe before I go back to Miami, we'll walk the Williamsburg Bridge one more time. Hey, War Walkers, as they are out and about tonight. They know folks are going to park wherever because of the rain. Ah, you're right. Good point, War Walker, very good point. JR says, Tom, when the Fed pivots on rate hikes, wait and let the market bottoms before you buy it. I think that's a good piece of advice. Yeah, I mean, for me in my actively managed account, right? I have the highest cash levels I've ever had, pretty much 99% cash. And I'm waiting for a follow-through day, and I'm also waiting for this quantitative tightening cycle to subside. So we were outside of the Adidas store because, look, Paul Tudor Jones, Stanley Druckenmiller, and for those of you who didn't see the live stream last week, Paul Tudor Jones was actually in New York City speaking at the Robinhood / JP Morgan Chase investor conference. And if you want to listen to that interview, if you type !PTJ in the chat, so PTJ for Paul Tudor Jones, the Nightbot is going to drop the link to the article, the interview with Paul Tudor Jones and Andrew Ross Sorkin of CNBC. And essentially what Paul Tudor Jones said within that interview is he said, look, we need to start defining the decades. Defining the decades. So He said the 1980s, or he said the 1970s, excuse me, could be defined as the stagflationary environment and high inflation. The 1980s, we got the construction workers out here. I always have the utmost respect for anybody who does manual labor. It's not easy at all. So big respect to all of our New York City construction workers. The 1980s could be defined as a period of extreme dollar volatility. And the 90s is defined as the first real innovation boom leading up to the tech wreck. You can think about the early internet, right, of the 90s. The 2000s, or the O's, you could think of the great financial crisis in 2008. And the teens, right, coming out of the great financial crisis, Paul Tudor Jones said that you could define that era by ZIRP, right? Or ZIRP stands for zero interest rate policy, quantitative easing. And he used the terminology monetary experimentation. That's the terminology he used. And I think he's spot on. This is an experiment. This is a monetary concoction. Modern monetary theory, QE 123 ZIRP, Operation Twist, all this interventionist nonsense. And I think, well, what he said, to use Paul Tudor Jones' words, he thinks the 2020s are going to be the exact opposite of that. He thinks that we are going to revert back to a fiscal environment that's more conservative, right? Because governments are going to need to force themselves to be more fiscally conservative because they would go bankrupt. They think that we are going into a monetary environment where interest rates are going to stay higher for a prolonged period of time. So if that's the case, could we be repeating a market environment where we sort of go sideways in the S&P for 10 years? I think it's possible. Is it going to happen? Maybe not. Maybe it will. But I think we need to be open to that. So once again, if you want to listen to that interview yourselves, I would really, really highly check it out. Highly recommend you check it out. Exclamation point PTJ in the chat, and the Nightbot will give you the interview link. Megan McDonald says, how long have you worked in finance/economics? I have never worked in finance. Well, that's not true. I did an internship at a hedge fund when I was in college, but I'm in enterprise tech sales. So I sell software and hardware into the Fortune 500 and Global 2000. But I manage my own money, and I just have a passion for the financial markets. But I do not work in the industry. After college, I found myself sort of fell backwards into a tech sales career, which has worked out. I like it, no complaints. Okay, so this is Washington Place. So if you continue down Washington Place, you'll run right into Washington Square Park. Now, since we're near New York University, you know I gotta mention Professor Damodaran. And Professor Damodaran is a very well-known and recognized professor at the Stern School of Business. And he is widely regarded as the Dean of Valuation. And he teaches two very famous classes at the Stern School of Business, one of which is called Corporate Finance, and the other one is Securities Analysis. And you could actually take those courses for free. Damodaran actually posted all of his lectures on his YouTube channel for free. So if you, I think if you click one of the links in the description, if you join our Discord, I posted the link to those courses, both in corporate finance and securities analysis. However, if you actually just want to take those two specific courses at NYU, they finally are offering them as standalone courses where you could get a certificate credit, which I would highly recommend. But if you don't have the money, if you don't have the resources, I think you should still put in the time just to learn the skills. I think the skill acquisition is way more valuable than the piece of paper, right? Because at the end of the day, finance is essentially the money business, right? And there's really no barriers to entry. So if you're good, you'll make money. If you're not good and you don't put in the work and you don't do the diligence, well, then you won't be a good investor. So I think from an academic standpoint, DeModern is probably bar none the best person to learn from an academic standpoint. Now, not from a practice standpoint. Now, there's always that argument about, you know, why would I learn about the investment business or trading from somebody who doesn't do it in practice? And I understand that. But Professor DeModern, he's one in a million, I would say that. Now, if you want to buy the textbook, you can get DeModern on valuation. You could buy these books used off of Amazon for like $7. It's definitely worth the investment. And it'll teach you the basics, how to read a balance sheet, how to read an income statement, right? And you'll have a better sort of perspective and a grasp on finance. And he teaches right down the street here at the Stern School of Business right here. But I really like this area down here, Waverly Place, near Washington Square Park. The campus of New York University is awesome. Definitely a very unique place. Hey, Christian Wilson, what's up? Good to see you, Christian. Welcome. So this is a really good ramen spot. I'm not sure if anybody in the chat has been. This place is really good. They also have really good sushi, but the sushi is very expensive here. But it's good. Can't deny that, it's very good. And this is the opening of Washington Square Park. This is the northernmost side of Washington Square Park. We are actually gonna make a right and head uptown because I gotta get the train. Hey, I see Western Mass Dave in the chat. Dave, hopefully you're feeling better. You're getting, I think you had a cold or the flu or something. I had a cold as well. Hey, the one and only Chris Beeman is here. Good to see you, Chris, from Arizona. Always a pleasure. I know, love is kind is like sushi is expensive everywhere. You know, in Miami, it's actually not too bad. I've been to some sushi restaurants in Miami and, well, technically not Miami, Fort Lauderdale, but anytime I talk about Southern Florida, it's just Miami. But Fort Lauderdale has some great spots, pretty affordable too. All right, we got to pick up the pace. This is East 8th Street. We got to go to 34th Street, the Moynihan train station, to head back to Long Island. So this used to be a CVS, and I think they closed it. Now, if you guys are following me on Twitter, if you want to connect on Twitter, you could follow at Walks Wall Street. Now, I was listening in on Rite Aid's earnings report. And there was something so crazy that was said on that earnings report. And the CEO of Rite Aid got on the call and she said something along the lines of, I'm paraphrasing here. If you want to know exactly what she said, it's on my Twitter. But she said there was a huge unexpected uptick in shoplifting, that they actually decided to go forward with multiple store closures in the New York City metropolitan area. I think it resulted in like a $5 million loss. And I mean, sometimes when I walk into CVS, I've seen it myself too. I've seen people just rip things off the shelf and just walk out like it's nothing. Not to be negative, but when it starts impacting corporate earnings, I think maybe some of the politicians will be pushed to be a little bit harder on the crime. Who knows? Wow, Gary Carpenter says, I remember gas at 99 cents. So where's crude oil trading at right now? CL, ticker symbol CL. Was it trading at like $86? Maybe. Okay, coming up on East 14th Street. Now, does anybody remember in New York, I obviously don't remember this, but from like my mother and my grandmother telling me, the subway tokens, any New Yorkers in the chat actually remember taking the subway with the subway tokens? Anybody remember that? I don't think I've ever taken the subway with the tokens. I think I'm too young for that. I always stop, can never trust the cars. Laura says, yep. War Walker, you did too? Nice. Seems we have a lot of people. Lonnie says, yeah. You know, I hope you guys kept some of those old subway tokens. I think those things are going to be worth some money someday. The dark horse is it's forecasted $125 a barrel after midterms. We'll see. We'll see. Hopefully not, but maybe. It definitely doesn't help that OPEC announced a 2 million barrel per day cut. Oh, it looks like a PF Chang's is coming here. Hey, DM is here. Says, I remember the tokens. Man, I wish I would, I'm going to go on eBay and see if I could buy some of the original subway tokens. This is a pizza shop. Little Italy Pizza to be exact. All right, so tomorrow is a busy day on Wall Street as well. Please no political comments in the chat about vote this way, vote that way. It just stirs up too much ruckus. But tomorrow, Goldman Sachs is reporting earnings. We're going to be covering it on Walks on Wall Street. There's also going to be Tesla reporting earnings on Wednesday. And I think that's the most important earnings report of the entire week. And the reason why I say that is because Tesla, the market cap is so big. And if we think about the S&P 500 being a market capitalization weighted indice, Tesla is within the top 10 stocks in the indices. So if Tesla misses earnings, I think it's going to blow wide open, and you could see significant declines in Tesla. But just like all the other stocks on the exchange, we are severely oversold. So it's a very big possibility that we could actually have a pretty big rally back to the moving averages for our ferocious bear market rally, and then sort of fade that earnings report. So it's going to be very critical. Now, I was posting some charts on my Twitter, and Tesla looks like one of the worst topping patterns I've ever seen. It looks to be carving out a very nasty head and shoulders top. And with this QT, quantitative tightening environment, I think you'll see in this next earnings report, Tesla's gross margins are going to compress even more. Now, granted, I will say, Tesla, one of the reasons why it trades at such a premium valuation is because they have premium gross margins. Okay, so think about Ford Motor Company or General Motors. Think about the gross margins on their vehicles. Maybe 8%, maybe. 100% it's under 10%. Tesla, we've been seeing consistently 30% gross margins. Now, I think last earnings report, we had a little bit of margin compression. I think about 29% gross margins maybe. And with this inflationary environment, I think this is a vegan ice cream place. I think with this inflation that's been raging across the world, I think we may see margins compress a little bit more. We'll see. We'll see. John, thank you so much. This is time check 10:46. Thank you, John. I'm actually sweating. I started off the stream pretty hot. Started off the stream pretty cold. And now I'm sweating. I'm hot. Well, we've gotten some crazy amount of road work in tonight. We must have walked, 10 miles? We've been walking for 2 hours, and we went all the way to Lower Manhattan and back. Yeah, we probably banged out about 10, maybe 8 to 10. Yeah, Penelope's like, Tom, you're probably gonna now cause inflation of Subway tokens on eBay. Excuse me, that's hilarious. But seriously, I think I want to buy some of the original New York City Subway tokens. Because think about when I'm, 70 or 80 years old, to be able to show my kids original New York City Subway tokens. So I saw a really good comment about the sales delivery model at Tesla with the dealership models. It's a very good comment. Now, I want to answer that, but I gotta rush to the train. But I programmed an article into the Nightbot about this exact thing. So Lucid Motors is running into this exact problem about trying to sell, it's called direct to consumer. And Tesla found some sort of loophole where they were able to do it. I sort of forget the exact way, but I'm not sure if maybe one of the moderators, I forget what the Nightbot command was, but there was an amazing article in the Wall Street Journal that outlined all of this commotion that's been going on with direct to consumer sales and dealership sales as it relates to a lot of the new EV companies. Very good comment. Amante del Mondo. It says if you're at 70 and you're hoping to sell some dumb tokens, then you did your life wrong. What do you think I did wrong? I think it's an interesting piece of history, and not everything's about making a buck. But as a New Yorker, you know, being able to show my kids, hey, this is how I used to get on the subway, do physical tokens, I think that's cool. Now, this is a shopping cart from Target that has been mutilated mercilessly on the streets of New York. All right, I'm gonna put you guys down for a minute. I gotta take the jacket off. I gotta do it. So I will put you guys down for a minute, but you're gonna have a beautiful view of the Empire State Building. It's fantastic. And allow me 1 second, I just gotta take the jacket off, it's getting so hot. All right, we're good to go. This statue is actually pretty cool, pretty unique. Yeah, War Walker, I may grab some orange juice. But for those of you who are new, this is the Flatiron Building. It's one of the famous New York City icons here. And unfortunately, it is covered in scaffolding. So about halfway there, we're gonna walk up Broadway because it's a little bit closer to the Moynihan train station.
Yeah, but like,
Hey, Dolly Girl Twins. Hey, Tom, you still sound a bit under the weather. So I feel fine, but it's just my voice is a little bit taxed. Because last week was a busy week for me, giving presentations, and today as well. It was pretty much nonstop at work giving presentations. So if you think about, I was thinking about this today, and I'll tell you guys, we already covered the topics we needed to cover for today. It's on hour 2 of the live stream. So we already covered what we needed to cover. But I was thinking about this today. I'm talking about 90% of the day. So maybe I should be doing something to conserve my voice. Because if I have to jump on a call with a prospect, maybe if I'm giving a demo or just doing a presentation to a new prospect or a new customer, that's 30 minutes to an hour of talking, then Q&A, then the live stream. But I think that's really good. I think it actually helps me with public speaking, how to talk more direct, how to get my point across a little bit better. So I think it's good. overall, I think it's good. All right, West 26th Street. This place is always packed. I think this was the one time we walked past it where it wasn't. Ah, Frank Gonzalez. So I did want to talk about one other thing as it relates to Bank of America's earnings. So we've been hearing across the board about all of these layoffs, right? Let me cross the street. So we've been hearing across the board about, all these layoffs, especially as it relates to a lot of the tech companies and big banks. However, once again, if you type !BAC, look through the investor deck of the earnings deck. Bank of America actually expanded their headcount in the investment banking sector by about 8%. Now, granted, here's another interesting piece of data. The bank has been very, very efficient in investing in technology over the last decade. That Bank of America now, today, operates more efficiently with less employees than it did in 2010. So Bank of America today operates with less employees than it did in 2010. And we've been talking about this for a long, long time on the streams. And investing in automation and further streamlining those processes are going to lead to the reduction of headcount. Now, I'm not saying that it's a bad thing, but software in general sort of helps to streamline those processes, right? Even if you think about, I always talk about, sales and trading at the investment bank. Now, sales and trading isn't as big of a department as it relates to headcount as it once was, because a lot of the trading activity is all, algorithmic and things like that. So you really don't need a lot of. The sales and trading department at the investment bank is shrunk substantially. But I think it's an interesting trend to watch. And as we hear from Amazon, as they report earnings, Q3 earnings, Amazon spent more money in research and development as it relates to investing into robotics and automation last year than any other year in its history. Now, why do we think that is? Well, there was a study, I believe it was a KPMG study or a Deloitte, I forget, that says by the year 2025, Amazon will have exhausted their entire talent pool, which means that at one point in time, people have either already worked for Amazon or Amazon has already hired these people and they've subsequently quit or gone on to work at other places. So if you think about the goals of Amazon, same day delivery, next day delivery, in order to achieve those goals, you're going to need to automate a lot of these packaging facilities. So maybe a trade that we could talk about later, not on this live stream, but next live stream. What are some of the companies that are providing robotics and automated services to these industries? Hey, Herbert, thank you so much for the $5 donation. Says, Tom, you make a great point. Most banks that were built years ago in size, but only use small part of their overall square footage. Yeah, I agree, Herbert. Thank you so much for your donation. I appreciate the support. So there was an interesting article in Investors Business Daily last week that was talking about a lot of the last stage of automation as it relates to warehousing is called lights out. So I want you guys to do some research on that. We don't have enough time to talk about it tonight. I'm trying to rush to the train, but the last sort of step to make a lot of these warehouses so you could pick, pack, and ship products fully autonomous, it's called lights out. And essentially what lights out means is at one day, you're gonna be able to walk into some of these warehouses. There's gonna be no lights because you don't need the lights. Because it's all robots. So these robots will be programmed to pick, pack, and ship this specific bin, run it over to this specific department, load it onto this specific truck. But I think that's probably about 7 years away, maybe 8 years away. Herbert, yes, thank you so much. I appreciate the additional donation. You are way too kind. I really do appreciate the support. Man, we got the Q32 barreling down the tracks right at us. But team, if you enjoyed the live stream tonight, feel free to leave a like on the video. Hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, discussing the financial markets. The main topic for tonight's live stream was Bank of America earnings. We also talked about some valuation metrics on the S&P 500. If you want to do some more deep dives of Bank of America's Q3 earnings report, if you type !BAC in the chat, I programmed the Nightbot to give you guys the Q3 investor deck for Bank of America. So feel free to dive into that tonight, and we will see you tomorrow right here on Walks in Wall Street. We'll be talking about Goldman Sachs. I think their sales and trading department is going to rip its face off. I think they're going to be very successful. We'll talk about it. And to the mighty bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. And I'll see everybody back here live tomorrow at 8:30 p.m. So the LT Prod, thank you so much. Austin City Limits. Hopefully everybody has a great Tuesday. I want you guys to have a successful and prosperous week ahead. And we'll see you in the next one. So Val Christian Wilson. GNJR. Thank you, everybody. Get home safe, and we'll see you tomorrow.